This is the Watchman giving a clarion call. And things are really starting to get interesting on the banking scene, aren't they? Isn't it weird how no one is talking about the Dow at all-time highs and everyone's talking about the uncertainties, the wobbly stock markets, and especially the wobbly banks? And this seems to have almost happened, this change in sentiment overnight. And it just goes to show you how quickly the winds of public opinion can shift on a dime. Now, of course, this doesn't surprise folks like us. You and I, we've been watching and waiting for this international train wreck to manifest itself sufficiently in the banking scene. And finally, it appears that with this new news coming out, that the chickens might, just might, be coming home to roost. What do I mean by that? Well, consider the newest investor angst that the world is seeing in Deutsche Bank's brand spanking new troubles. All over mainstream sources in the last few days, especially in Drudge and other sources just yesterday, we saw the headlines that Deutsche Bank's share price is in free fall, printing just over $11 a share. Now, brothers, to put this in perspective, their worth, their market cap is just shrunk below Twitter's. Yes, Twitter, who has also been cliff diving in price for a while as well, is now worth more than Deutsche Bank and Brothers. That is a gargantuan problem. You see, Twitter may rise and fall or even be sold to a new bidder on the cheap in the near future, but Twitter is not a world-class derivatives player, my brothers. Twitter has not leveraged its market share 100 or even 1,000 times over in the shadow banking world. Now just look at the size of the derivative holdings of Deutsche Bank. And this chart I'm showing you right now was from 2 years ago. That's over $60 trillion with a T, dollars in OTC derivatives that Deutsche has been responsible for. This is roughly 20 times higher than an average year's GDP in Germany itself. Think of Germany. It's the driving force of the European economy. Okay? Think of all the wealth in Germany. Think of all the companies in Germany. All the car companies, Mercedes, BMW, all the companies, all the technology, all the patents, all the land, all the real estate, all the production, etc., etc., etc. You'd have to have 19 more Germanys simply to equal this insanely tall, explosive Jenga tower of derivatives that Deutsche Bank has immersed itself in. Okay, so the fact that Deutsche Bank is worth less than Twitter should be ringing your alarm bells right now. And Deutsche Bank has to remain a going concern. Okay, they can't fail for the system's sake, because if they do, then it means all the nominal valuations in the derivatives world that they've been, playing in for the last few years, those could become actual valuations in the event of a bank's default. And that's exactly what happened, what started to happen in 2008, when the big players in the banking world were dropping like dominoes. And it's starting to feel, to me, a little bit like it did right before Lehman Brothers met the worst of all possible fates for a bank. Now, are you starting to get a little concerned here? Well, hold your horses, friend, because I've got news for you. It gets a lot worse. You see, the insider hedge fund money that handles these derivative transactions for Deutsche, roughly 10 different hedge funds, all with the insider information, all who know in a moment's notice if there's a serious problem, have quickly and quietly begun to withdraw their excess cash and positions from that institution. Basically, the insiders are panicking best because they are panicking first. Now, pay attention to this, brothers. I want you to consider something right now. The most amazing thing here to me about that announcement about the hedge funds withdrawing funds is not the fact that it's happening. Okay? Uh, Hedge funds move money around fairly frequently, and they do remove funds from banks from time to time. It happens. Now, the most amazing thing about that announcement is that someone powerful made it a public announcement. I mean, do you understand the significance of this? It's just as telling that someone wants this to be known than the fact that it's actually happening. Now, it's these announcements being made public that's causing the extra fear, causing the consternation, causing the jitteriness in the markets, from bonds to commodities to equities to the financial stocks. The equity markets in the U.S. and Europe are starting to take hits from this, and the banking sector is being absolutely pummeled right now. Okay, that's the key here. That's why Deutsche is so important. It's such a linchpin to the banking sector. Because when Deutsche has a cold, everyone else is going to sneeze. Okay? And Deutsche doesn't have a cold, friend. Okay? They do not have a cold. All right? They have terminal cancer. All right? That is what this over-leveraged position, this undercapitalized bank, it really has, okay? And no one can fix it. No one is big enough to fix the problem, truly fix it. So it's everyone's problem, because when this bank goes down, if the bank goes down, you start to see the contagion. You start to see banking contagion. You will see equity contagion. You will see sovereign and currency contagion. You will see sovereign governments and their debts and their currencies start to trade like penny pink sheet stocks. That's exactly what happened in 2008. And it's exactly what will happen again if this is not a false alarm. Okay? So seriously, the contagion is already spreading in the German banking system. Okay, look no further than Commerzbank. That's Germany's second largest bank, behind Deutsche Bank. To see what I mean, they just fired 10,000 employees in one glorious chop, and they suspended their dividend as they did so. Now, they have been fined, it's true. That is also going on in the background. But these are huge, huge repositions of people, of employees, of capital, the cessation of payments. When you stop paying your dividend, it sends a huge negative signal to investors, to depositors, everyone. You don't do that unless you think you don't have any other choice. And if they're doing that, their bank is not in a great position either. And we've all come to expect these banking problems from Italy's banks or Greece's banks or any place in the Mediterranean. They're the sickest men in the room, that's true. But when the Anglo-Germanic banking houses start teetering, okay, like a toddler learning to walk, it's time to pay serious attention. And the biggest problems yet, okay, the biggest warning signs that something terrifying could be going on behind the scenes at Deutsche Bank are now the hilarious denials being uttered by almost every serious policy wank on the old continent. Okay, for instance, remember Diesel Boom? Yeah, he was that goofy guy from the Netherlands. He was that crooked autocrat that declared that the bail-ins that they imposed upon the Cypriot people, the people in Cyprus, when their banking system failed, he declared that the bail-ins, that theft, that confiscation of their wealth worked so well that now the bail-ins were the template for all of European depositors. Remember that? He won great, well-deserved infamy for those comments, and it would seem those depositors on the European continent had best take care now, because our infamous friend Dieselboom just said of Deutsche Bank that, quote, they meet all their capital requirements. They don't have to reliquify or retool their balance sheet in the slightest, end quote. Yeah. If Diesel Boom and others are saying this, it means it's time to quit the bank and find your mattress. It's time to find some place tried and true for your cash. There's an old saying, never believe something until it's been officially denied. And right now, my brothers, many godless kleptocrats in European finance are saying the same sort of things that banking officials said of Lehman, of Bayer, of AIG, right here 8 years ago before they became garden variety compost. Now, I'll give credit to Jim Willie on this. This man has been uncanny and right about a lot of things over the years. Not everything, but many, many things. And the problem with some of his predictions is that they're so prescient, they're so early, that many people think that he was wrong just because he was early. For instance, 3 or 4 years ago, he was saying that Deutsche Bank had problems under the hood, that they would be in grave danger of failing. And time went by, and folks began to mock him. They said everything was fine in Deutsche Bank. Jim Willie's just a crank, right? Well, now that Twitter's worth more than a bank sitting atop $60 trillion in derivatives, people aren't laughing at Jim Willie's prediction about Deutsche Bank anymore. This is deadly serious business. If Deutsche fails, or heck, even if Deutsche needs a bailout, the confidence, the blow to the system would be devastating. Okay, because the true state of the world, of world finance and banking, would finally be revealed. Now, keep an eye on Deutsche Bank. They have danced on and off of a knife's edge several times and come away alive. But will this time be different? Or is this truly and finally the last moments of the 11th hour for the unruly market-rigging den of thieves at Deutsche Bank? Is justice finally here for the banking cabal? Well, I believe we're about to find out, brothers. And if it is that moment, then you'd best batten down the hatches. This is the Watchman signing out. Stay vigilant and bring the fight to them.